Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah. It's the final talking point of this calendar year before we all go for our holidays. And it's an absolute pleasure to have the views of Rahul Bhasin of Bearing Private Equity on this, because it simply would be unfair to talk only about what could happen over the course of the next 3 months and in markets, as opposed to talking about the slightly longer term and corporate activity, which they would be viewing so closely. Rahul, great having you. Thanks for joining in.
Thank you for having me.
The pleasure is ours. Rahul, how do you see the change in corporate activity in India, both from a perspective of what it was relative to the supply chain disrupted COVID period, and and in a period currently wherein the global economic scenario is not looking as great as it might have at the start of the year or maybe the better part of last year?
Look, very strangely, and this is very rarely something like this happens because markets tend to be very synchronized around the world because the way capital has been flowing and the global markets have been getting more and more correlated. But as far as economic activity is concerned, I think India is on a different trajectory. We are at a different point in the cycle. We've actually cleaned up our banking system in terms of, we've taken all the pain. So the banks are now capitalized and have the ability to lend. The real estate sector, which has got huge multiplier impact, has also gone through a cleansing process. And I think now that it's the larger, cleaner ones who are sort of gaining momentum and gaining a lot of market traction. And that seems to be an upswing too. Government spending on infrastructure has been sort of getting raised systematically and quite correctly, in my view. So if you look at the high beta parts of the economy, they're all on an upswing. You add to that the fact that geopolitics, which has typically worked against us for several reasons across several decades, is now acting in our favor. And my view is that the China plus one is something real. But what is even more important, rather than geopolitics, is that the government, the bureaucracy, all the stakeholders in facilitating this are actively engaged in trying to make this happen, as against, they were often historically a roadblock, but today they're a catalyst. So I think for the first time, I think in the last 12 or 13 years, I'm seeing a very strong capex cycle ahead of us. 2 out of every 3 companies that we talk to have a very strong capex plan ahead of it. And I would suggest that this number, even even 3 years ago, 4 years ago, was less than 10%. So that's a very dramatic shift. So definitely, economically, we are definitely on an upswing. If I were to correlate that to markets, I won't be quite as sanguine, largely for 2 reasons. I think that when other asset classes around the world with the higher cost of capital start to come down, then inevitably India ends up becoming more overweight just as a part of their portfolios. So the probability of more new money coming here reduces that much. And there is, in fact, a risk that they might continue to be sellers. On the flip side, when you have capex cycles coming in, yes, balance sheets are very underlevered. So initially, it might be funded to some extent by debt, but you also then have sustained equity issuances, which sort of come into markets. So I think the market returns might be a little bit more muted, but I think our economic growth engine is going to be much stronger than most people believe. Yes, COVID has disrupted the wealth and is having a negative wealth impact at some level, especially in the sort of at the bottom of the pyramid. But I think various government schemes, etc., are putting that back in place. And higher commodity prices, especially higher agricultural commodity prices, are definitely helping significantly. So my view is economically, not only the next 6, 12 months, I think we'll surprise on the upside, but even over the next 3 years, 5 years, and I'm hoping even longer, we'll see an upside surprise.
And I presume that's the time horizon with which you go about looking for your investment opportunities, Rahul. So, with an assumption that if there is a negative surprise in 2023 on the growth side, and the relative valuation changes that might happen for our markets. Those only become opportunities from your perspective because you have a fairly sanguine view about what economic growth would do over 5 years. And at some point of time, asset prices will kind of, even if they are derailed in 2023, might come back to normalcy to catch up with the economic growth.
Well, I very strongly believe that. So, anyone who has any kind of medium to long term sort of perspective on the Indian market, I think it's a fabulous place to be investing money in.
Right.
I also believe that there is so much of, once the 2008 global financial crisis happened, post that, the response of the world almost in unison or sort of uh, collaboratively was to take the cost of capital down to zero. Now, if you look at the Chinese miracle, it was largely because they took their cost of capital as close down to zero as possible. They basically punished their savers. Um, and that was the key ingredient in the Chinese system. Now, in India, we had so many other structural bottlenecks that you didn't see that upside. But I think over the last 5, 7 years, a lot of the structural bottlenecks have actually been removed. So you will see an upside from that lower cost of capital. And that lower cost of capital has allowed disruption. Now, normally innovation is an expensive hobby, and that usually happens only in the richest economies of the world. But when your cost of capital is so low, that extends to countries which are resource rich and labor rich and talent rich. And therefore, you've seen a huge swath of disruptive innovation coming out of Indian companies. And I think that the this typically tends to be a long cycle. You'll see the commercialization of that, and you'll see the sort of economic payoff of that over the next 5, 10 years. Just remember that just now, just because the cost of capital has started to go up right now, that does not negate the work that has happened over the last 12 or 13 years. So you will see that economic payoff coming in, and I think that's going to sort of give another very strong engine of growth to the Indian economy.
Great. So, Rahul, let's work with an assumption that things largely would stay constructive from an economic perspective, and therefore from an earnings growth perspective for a lot of key sectors as well. I was trying to understand when you go out looking for opportunities, because I heard you say that 2 out of the 3 companies that you're meeting are now talking about capex as opposed to 10%. So that's a big delta from 10% to 66 odd percent. Do you get tempted to look at companies which will potentially have fairly strong opportunities by virtue of capex coming on stream 2, 3 years out? Or in certain cases, there are companies, few of them or a few sectors, which have already stepped up capex, capacity utilization levels are low currently for multitude of reasons, and those might start showing immediate upticks as soon as recovery in consumption were to happen. So, how are you trying to think between the two?
See, if I were a listed manager, I would look at the ones whose currently the capacity constraints are low, um, where the utilization is low, and that upswing, because the incremental capital cost of that is very low in terms of there being low cost growth, and therefore sharp increase in return on capital employed, return on equity, EPS, and therefore that'll give you a very strong momentum to a listed manager. Um, on the other side, the capex cycle, if the incremental return on capital employed is good, it's definitely attractive. But for us specifically, what we try to look for is also an element of disruption, because the kind of cost of capital that we all have, we are looking for economic returns which are multiples of the market rather than small sort of increment on the market. And unlike most private equity kind of constructs around the world, we don't use leverage, right? So all our returns effectively come from growth. Historically, we found in India you can never buy anything cheap. So we end up with having PE contraction. At least the last 25 years, that's been my experience. But as long as you can, work with companies and make sure that their growth trajectory doesn't slow down and they keep compounding a high level of growth every year, that tends to create a very, very attractive opportunity. Um, in fact, we managed to compound money just shy of 30% a year for 25 years. And that's entirely on the back of the underlying growth of the company. Typically, the companies have had expanded margins during our investment period, but that gets negated by the um, PE contraction that we've also faced. Right? So it's basically the underlying growth, and that kind of growth compounded will typically come only when there's some degree of disruption taking place, either in the business model or in the technology or in the way the markets are going to be. Um, our own perspective is that we like to look at an industry, we like to look at all the enabling technologies and say that for all the stakeholders, how will this market and this industry evolve over the next 10 years?
Mhm.
And which are the companies which can take it there, and how do we work with them? Right. And I think that's so sort of, there's a lot of scenario analysis as to what happens not 3 months, 6 months down the line, but 5, 10 years down the line.
Sure.
And all I can say is I've been doing this for 35 years. My job is more exciting today than um, it's ever been.
Uh, so firstly, that's a stellar record. So congratulations to you and your team on that. Uh, what I'd love to understand, Rahul, that if indeed these times are so exciting, more than ever in history, um, have the opportunity sets, the has the spectrum of opportunities actually gone up, and therefore make the job that much more difficult currently? Part one, and part two, have there been very new opportunity sets that have come up in the last 12 to 18 odd months because of COVID and digital disruptions and a lot of initiatives that the government itself has taken? And therefore, have you, by virtue of the opportunities available, reshuffled your portfolio companies quite a bit? So because you may have found newer opportunities.
Yeah, I think there's, earlier, a lot of, when we started out, a lot of our investments were in IT services and BPO kind of businesses, which were
Mhm.
disruptive at that point in time. But if I just look at the last 24 months, a lot of our investments have gone into the EV supply chain. A lot of our investments have gone into recycling, sustainability driven initiatives, which I think will become bigger and bigger as time goes by. A lot of them have gone into facilitating healthcare, the individual taking control of their own healthcare as against outsourcing everything to a doctor or to an established health practitioner. We've also seen an explosion of opportunities in space-enabled technologies, right? Which is again, so these are 3, 4 of things which have come out new in the last 24, 36 months. And I've, not, if you notice, I've not even mentioned things like digital commerce or, the um, platform-based businesses or the social commerce and all the sort of traditionally very highly active or invested spaces. That's all there. And if you look at the penetration levels in India, that still affords a big growth opportunity over the next 10, 20 years. But I'm saying these are, it's, it's broadening all the time. Right?
Mhm.
Telematics, different kinds of IoT applications and different um, bundling with traditional industries, completely disrupting the way things happen. Cybersecurity, which we think is going to become bigger and bigger and bigger. I think people totally underestimate the importance of cybersecurity, and people, as an economy, and I think that I'm very surprised that cybersecurity is not a bigger talking point in every sort of every stakeholder in this society, just simply because of the amount of cyber crime that is almost rampant um, in not only in India but around the world.
Got it. Rahul, are there significantly large, liquid enough opportunities available within the listed universe for some of these pockets, or are these largely in the private markets?
Um, so these are younger and very disruptive. So they are, predominance is in the private
Private
markets,
markets.
but you are increasingly seeing, the number of calls we get in our office from large companies saying we want to get into this space. Are there sort of, younger companies that you guys work with that
Okay.
we can collaborate with, right? Normally, I would always find calls coming from the younger companies wanting to collaborate with the larger ones. But the tables seem to have turned over the last 24 months. Um, and in fact, we found that this has become such a strong trend that we've created a deep tech platform called Sanchi Connect to connect these startups wanting to work with large companies and vice versa, and find solutions in terms of funding, people, etc., for these companies. Essentially, we can invest in maybe 1 out of 500 companies that we meet, but we do think that more than 50 of them are actually very viable and interesting businesses, and we were looking for a solution for that, and that's why we went ahead and created a platform for them.
That's very interesting and something to visit to for sure after this interview is over. I have a final question, Rahul, and that is, where is it that you see the possibilities of this whole promise that is there around India uh, getting, I mean, punctured would be too strong a word, but getting impacted in a slightly larger than a normal fashion? Would it be a global growth shock which might percolate down to India, or could there be something within? Anything that you're watching out for? Something that
The
concerns you?
Yeah, most global growth shocks, etc., are usually result in lower commodity prices, and most of those commodities India imports. So we tend to, if there's a massive slowdown outside, it would actually help us just because of the stage of the cycle that we're in. So I'm not so worried about that. I think there are issues that, our growth in Indian economy, our reforms, etc., has every arm of the sort of system has not kept track or sort of kept up with the whole transformation that we've seen. I mean, a very sort of obvious one that I can think of is maybe the judiciary or the police system, right? Like I mentioned, that cybersecurity is a very big issue, but just the awareness, the sort of technical expertise required for that arm of our governance architecture to keep up with it, to prevent it, facilitate, um, you know, restoring people's assets. I think those kinds of things are probably things which will slow us down. But I'm very, very sanguine about India's prospects, more than I've ever been in my career. Mhm.
And that's a long one, and that's a tall statement. Therefore, on that positive note, I would thank you, Rahul, for talking to us today on, as I said, the last talking point of this year. Much appreciate, and look forward to actually having you a little more frequently on the platform, Rahul. It was great talking to you today.
It'll be my pleasure. Mhm.
Thank you so much, viewers. Thanks for tuning in.